Most people just kind of guess how much life insurance they need. And let's be honest, they usually get it wrong. They either get way too little, which puts their family's future at risk, or they get way too much, and that can be a huge waste of money. So today, we're going to fix that. I'm going to show you a super simple, calculator-style way to figure out the right amount for you. And we'll do it all in about 5 minutes.
So this is the big question, isn't it? It can feel pretty overwhelming, but I promise by the end of this explainer, you're going to have a clear, logical answer that's actually tailored to your life.
Okay, let's dive right in. The default for most of us is to just pick a number that feels right, but guessing is a huge gamble. I mean, being underinsured could mean your family has to make some really tough financial calls during an already impossible time. And on the flip side, being overinsured means you're just throwing money away on premiums that could be going towards your other financial goals.
And that's exactly why getting a precise, data-driven number is so crucial. It's all about taking back control and making a smart, informed decision for your family's security. We're going to replace all that guesswork with a clean, simple process, and it's backed by some pretty telling statistics.
So let's look at the numbers for a second. A staggering 42% of adults in the US feel like they just don't have enough life insurance. That is a huge number of people walking around worried about their family's financial future.
And here's the real kicker. A whopping 72% of people think a basic term life policy is way more expensive than it actually is. This one misconception is a massive reason why so many families go without the protection they really need.
Now, before we jump into the framework itself, just a quick but really important note. What we're doing here is an educational tool. It's designed to give you a strong starting point. Your final, perfect number will depend on your unique situation, so think of this as the first and most important step in your planning process.
All right, let's get to the solution. I call this the precision framework, and you can just think of it as your own personal calculator for clarity. It's designed to cut through all the noise and give you a real, tangible number you can actually work with.
And here it is, the entire framework in one simple formula. It looks pretty straightforward, right? Your coverage need equals your expenses, plus your income needs, plus your future goals. All of that minus the assets you already have. Now, let's break that down piece by piece.
We're going to break this down into 4 simple, easy-to-follow steps. By the end, you'll have a specific, actionable number that makes sense for you. So here's our roadmap. First, we're going to calculate all those immediate expenses and debts. Second, we'll figure out your income replacement needs. Third, we'll add in your big long-term goals. And finally, we'll subtract the assets you already have in place. Simple as that.
Okay, step 1, let's tally up your immediate expenses and any outstanding debts. This first part of the calculation is all about figuring out what your family would need to handle right away if you weren't around anymore.
We're talking about things like final expenses and any of those lingering medical bills, but also consumer debt like credit cards and car loans. Basically, any debt you wouldn't want to pass on to your loved ones. The goal here is to give them a clean slate.
And just to give you a concrete reference point, let's look at final expenses. Back in 2023, the median cost for a funeral with the viewing and burial was about $8,300. But remember, that's just the starting line. It doesn't include things like lost income or legal costs, so you'll want to build in a realistic cushion.
All right, let's move on to step 2, which is usually the biggest piece of this entire puzzle: income replacement. This is really the core of the whole calculation. It's about making sure your family's lifestyle can continue even without your financial support. So the simplest way to do this is to just multiply the annual income your family needs by the number of years you want that support to last. For example, if your family needs, say, $60,000 a year to cover the mortgage, childcare, and just daily life, and you want that support for 15 years, maybe until your youngest kid is grown up, that's a straightforward $900,000. See? We're aiming for a responsible plan, not a perfect prediction.
Now for step 3, your big goals. This is where we move beyond just covering the bills and start thinking about the future you really want for your family. This is what life insurance can really do. It secures those major life milestones.
So, common goals here are things like paying off the mortgage entirely, funding college tuition so your kids can have a debt-free start, or maybe just creating a nice financial buffer so your spouse doesn't have to make any panic decisions. This is your chance to decide what kind of legacy you want to leave behind.
And finally, the last step of the calculation is to subtract what you already have in place. This includes any existing life insurance policies you might have, any savings or emergency funds, and investments that you'd want your family to use for protection.
But here's a really crucial point to remember about this. That coverage you get through your employer, it's fantastic to have, but it's often temporary and it's tied to your job. It probably won't follow you if you switch careers, which is why, for most families, it's just not a complete plan.
Okay, let's put this all together in a real-world example to see exactly how this framework operates. This is where all 4 steps combine to give us that one clear number. Okay, let's walk through it. We start with our needs. We have immediate needs and debts of $100,000. Then, income replacement. That's the $900,000 we calculated earlier. And the big goal, paying off a $250,000 mortgage. Add that all up and you get a total need of $1,250,000. Now we just subtract what's already in place. $200,000 in current coverage and $50,000 in savings. And that leaves us with an estimated coverage need of a cool $1 million.
And there it is. So, the most important point here is, this is your number. It's not some random guess you pulled out of thin air. It's a thoughtful estimate based on your family's actual needs and your real goals. This is the number you can confidently take to the next step.
So, you have your number. Now what? Well, the next step is to figure out how long you actually need this coverage for. This is where we go from just a number to a real, actionable plan.
You know, for many families, especially those with kids still at home or a mortgage, the answer is term insurance. It's designed to cover you for a specific period of time, those years when your income is the most critical. It's all about matching the solution to your stage of life.
If you want to run through this calculation for your own situation, we would be happy to help. We can walk through it with you very cleanly, no pressure, and then show you some real options that actually fit your age, your goals, and your budget. Just head over to Platinum Pine Financial to schedule a call.
You'll leave that call with a clear target number and a solid plan to protect what matters most. And hey, whether you're starting from scratch or maybe you just want to double-check an existing policy, second opinions are always welcome.